I didn't start investing seriously until I was 11, even though I had been toying with the idea years before that. At 11, I bought my first stock. What followed was nearly a decade of experiments, trying to time the market, obsessing over charts, and chasing trends. It was exciting, but frankly, I wasn't making any money. It was pure trial and error, with no real foundation. During that time, I devoured every investing book in my local library. I was hungry to understand the market, but still lacked a framework. I hoped charts would somehow reveal secrets about future stock moves. They didn't. At one point, I even tried flipping charts upside down. That didn't help either. Then in 1949, everything changed. I read The Intelligent Investor by Benjamin Graham. That book gave me the philosophical structure I desperately needed. There are 3 core lessons I took from it, which still guide me today. Stocks represent real businesses. Before, I saw tickers and price changes, but I didn't grasp that behind every stock is a real business. Graham taught me to think like an owner. I needed to understand the company, its economics, competition, management, not just the symbol on the board. It wasn't about guessing what T or X would do next, but what the business was worth. The market is a tool, not a guide. Chapter 8 introduced Mr. Market, an emotionally unstable partner who shows up daily with a price offer. He might be manic one day, depressed the next. The genius is that you don't have to act. You wait until his price suits you. Most investors respond emotionally to price movements, but Graham flipped that on its head. Let the market serve you, not instruct you. Always insist on a margin of safety. Whether it's investing or crossing a bridge, never cut it close. If a bridge says 10,000 lb as max and your truck is 9,800 lbs, find another route. That margin protects you from uncertainty. In investing, it means buying with a buffer between price and true value. With those 3 pillars, I built my investing philosophy, a simple, profound framework that has stood the test of time. Later, I began evaluating businesses like a private buyer. Imagine someone gave you money to buy 3 businesses in your city, with 1 week to decide and no option to sell later. What would you look for? You'd seek a business with durable competitive advantage, a strong moat, honest, capable management, a sensible price. You'd avoid fads or cutthroat industries. You'd filter fast and focus deep. That's how I invest in stocks, not as pieces of paper, but as full businesses. One trick I use: I often analyze companies without looking at their stock prices. Just like handicapping horses, I study the fundamentals first. Price comes last. People think investing is about intelligence, but success is more about temperament, patience, rationality, and discipline. If you had a punch card with just 20 investments allowed in a lifetime, you'd think very hard before each decision. That's the mindset you need.